So the Fed just announced a rate cut in 9 months, which is a pretty big deal. And in this video, we're going to go over what this means for the Opendoor stock. I made a few videos on the Opendoor stock previously, and it's very interesting because we're in the middle of a meme type of rally. But I was looking at some more information. I'm going to go over the short float information. I'm going to go over the failures to deliver. And I think this is going to be more like a Carvana like rally. I think the stock has huge upside potential, but I don't think we're going to see a GameStop like crazy hype where it like goes up by like hundreds of percent in a couple of weeks. I think it's more like Carvana. But if we quickly take a look at the Carvana stock, like I have it pulled up right here. So as you can see, Carvana at one point was trading near like pretty much all-time low at like around like $10, $11. And over the span of like 2 years, it's up like 5,600%. It's up 5,600%, which is an insane, insane rally. So as you can see, the weekly chart, it didn't do anything insane like a crazy, like, 100% in a week, like we saw with like GameStop Mania. It did a measured move up, as you can see, a pretty much predictable wave. So I think for Opendoor stock, that's something we can see. But I'm going to go over the chart in more detail to show you, okay, like swing trade this, you would know like, okay, when to take profit, when to exit, and when to get back in. So the first thing we want to do on the chart is let's do the Fibonacci retracement because that has been very predictable for this specific chart. So we'll take it from the swing low. So the swing low is around like $2.50, like say like right here, to the swing high, which is around 1004. Let's see, that's 1003, 10. Can't get it exactly all the time, but it doesn't really matter that much. 1009, whatever. So from the swing low to the swing high currently, and so this is our Fibonacci retracement pattern. So if you take a look at the 45-minute chart, so this is how you would want to play it. So from here, one or two things will happen. Again, the Fed rate cut was very important because that was pretty much all this hype you're seeing right here, like this huge gap up right here, and then pretty much it holding the line at around $10. All this euphoria came because we had the Fed rate cut priced in. If we didn't get the Fed rate cut, this would have dumped like drastically like yesterday. So that's why you don't see any like major. That's why yesterday you didn't see any crazy price movement up after the announcement was finalized because this was already priced in. So from here, one or two things will happen, and this is how you should play it. And again, subscribe to the channel because what I'm going to explain to you next, I will make a video notifying you, okay, it's time to like lock in profit or, you know, not get in. This would be a bad time to get in. So I'll give you that notifications. So on this 45-minute chart, this red trend line is the 50-day moving average. It will come down and touch it. So when it touches it, it could either bounce right off of it or it could break this 50-day moving average. So if it breaks this 50-day moving average, we will get a sell signal on the super trend. And at that point, I'm pretty much can guarantee that it will fill this gap right here. It will fill this gap around, $5.70, and it'll come down to 618 first. It might go back up to the 848, and then it'll come back all the way down to this 38.2 price point to like fill that gap. Or maybe even it'll drop down 50% from here to like fill that gap, but it will fill that gap if it breaks this 50-day moving average. But if it doesn't break this 50-day moving average, then the next price point it will keep rallying up to is 1408. And why 1408? So, okay, now that we're familiar with the Fibonacci retracement, let's get rid of that so it looks cleaner. So we go back to the weekly, and this 1408 we had drawn from the previous video that we did, where we did the technical analysis on Opendoor stock. This 1408 is a very significant price point. It was previously acting as a support right here. And once it broke the support, it never tested it again. Once it broke this support, there was no other support or resistance for like the next year. And so now if the stock price keeps rallying up, this will act as a resistance. Like the price will trade up to this price point and get rejected off it. Short term, not long term, not like, if you look forward to like a year or a year and a half. Long term, I think Opendoor stock is going to do what Carvana did. It's just going to keep going up. But short term, it's going to act as a resistance and it will trade back down. So again, recap, one or two things will happen. You go to the 45-minute chart, you turn on your moving averages. And as you can see, as I'm making this video, it's coming down and testing this 50-day moving average. If it breaks it and trades below it and we get a sell signal, Again, I hope you're subscribed and your notification turned on, because I will make a video, or I'll at least make a post on the YouTube channel notifying you, hey, like it broke the moving average, just so you know, just so you have the information and you can decide what you want to do with that. So if it bases 50-day moving average and prints a sell signal, then okay, short term, it's going to trade all the way back down until it fills this gap and it matches with our Fibonacci retracements. But if it doesn't, it bounces right off of it. The next price target, it's going to be the 1408. So from here, that's another like 40%, 40% from here. The next price target is 1408. And when we take a look at the weekly chart, it's pretty clear why that is. You know, like as you can see here, it was a support before. And as the price moves up, it will act as a resistance. Another thing I want you guys know, like, look at this, look at how it's just going up and up week over week. This isn't natural. Like, nothing about this is natural. Like, you have to be kind of like mental to think it's going to keep doing that and trade all the way up to this previous all-time high. No stock in history has ever done that. It's going to come back down. That's like natural, healthy market cycles. Like, it trades up like this, and then it will also come back down to like at least a 50% retracement in the short term, which is supported by our Fibonacci retracement signals. So don't expect the price to keep going up. That's just kind of silly. Like, you know, that like nothing ever works that way. So even if it does hit the 1408, it will come back down. That's just a natural, healthy market price movement. People on Reddit are hyping this stock to the moon. They're posting crazy gains, which are like drawing more attention. Speaking of which, please check the description for our own subreddit where you can like talk to me about like different stocks that you're looking at, post your own loss or gain or memes regarding like, you know, different stocks that you're looking at right now. So check out our own subreddit. The link to that will be in the description. But another thing I noticed, so we go here, take a look at the short float information. So the short float hasn't been going down, which is kind of like, I can't wrap my head around like what the hell is actually going on. Like, I would like to like interview like a short seller and see what they're thinking, because you would expect the short sellers to like kind of start to worry and like cover the positions, because a lot of this is because of the short sellers like buying it at a higher price and covering their position. But the when I see like the short float is also going up, that means more people after covering their positions or new short sellers are coming in and shorting it at these high price levels. So the way they're thinking is like, okay, they're thinking at $10, it's not gonna go higher than $10 for the next, you know, maybe a couple of months. So they're shorting it at $10. So if the price goes below $10, the difference will be their profit. So that's how the short sellers are thinking about it. But again, if it doesn't work out in their favor, because shorting a stock is a little bit more complicated, where you have to pay a price to borrow the stock. So for example, like I showed you, like the short float is going up, which is insane. It should be going down. Like back when it was like around 23%. Like, so remember I first made this video at when I was trading at 71 cents. The short float was only like 23% at that time. And you would like you would expect the short float to go down. This is what like naturally happens, but it's for some reason keeps going up. So it's at 26% right now. But take a look at this. The cost to borrow is not going down. The cost to borrow is still pretty much higher than it has been like in the past 2 years at around 5%. So the short sellers, for them to short the stock, it's more expensive than it was like in 2024 and 2025. And then if we take a look at the chart, so let's take a look at the weekly chart. So let's see, like around like 2023, the cost to borrow was like pretty much insignificant. And did it make sense for them to like short the stock at that price point? Yeah, it did, because the overall trend was down and the cost to borrow was like nothing, and the short float wasn't that high either. But like now the short float is climbing. That means any upward price movement, there will be a lot of pressure. There will be a lot of pressure for short sellers to cover their position. And this is kind of like this is what causes this like short squeeze, because not only is new investors coming in, these short sellers, like when they panic and they see like this massive loss, or like they get like a margin call, or they have to put up more collateral, like all these different things happen that could affect their account. They have to go back in the market and buy it at a higher price than they shorted it, which causes the price to like, it's like a it's like a weird cycle that just causes the price to like rally up and up and up. So the cost to borrow is elevated, and then also we're going to take a look at the failures to deliver. So we have the latest results for the month of August. This is a bi-weekly failures to deliver for Opendoor stock, and as you can see, it's slowly climbing up too. Like this is last time we I made the video. We're like right here. We're looking at this where I have the cursor at 72 million. So this is also like a sign where the short sellers are having trouble. If you don't know like the effect of failures to deliver on a stock price, this is like a pretty good summarization. As you can see, it creates artificial supply, potentially depressing the stock price. And it could also signal a short squeeze if the shares are hard to locate, which is what happened with GameStop price, which is what happened with AMC multiple times with AMC. And so this is another thing on top of the short float being so high, the failures to deliver rising. These are two things we can look out for to look for a potential short squeeze. But don't count on that because like they do a lot of shady stuff behind the back to, mitigate this kind of stuff, and that's like a whole another video. But think overall long term, I think Open Door is going to do what Carvana did. It's going to trade at a near all-time high and go past all-time high. But if you want to take advantage of short-term swing trades, again, I will make a video. Like as you can see, as I'm making the video, it is doing exactly what I mentioned in the beginning of the video. It's coming down to test this 50-day moving average. So make sure you're subscribed, you have your notification turned on, especially post notification, because even if I don't make an entire video and it crosses this 50-day moving average and it prints a sell signal like it did over here in Monday of September, I will make a post, even if I don't make a whole video saying, hey, this is what I'm seeing on the chart. We have a sell signal. So you could do with that information what you will, maybe lock in some profit or wait to get back in. And then if it prints a buy signal, I'll make a post about that too. So make sure you're subscribed and you have your notification turned on. But short term, like this is, we want to look at what the moving average is doing. But if it bounces right back off of it, most likely it will go all the way up to 1408, get rejected by 1408, and at that point we have to see what the chart is telling us. So one or two scenarios, and we just have to wait at the end of this week to see like what happens. So this was your quick update for the Opendoor stock. Please give this video a like. uh Please give this video a like, leave a comment. I respond to every single person who comments. And also, again, make sure to subscribe, turn your post notification. I hope you enjoyed this information, and I will see you on the next video. Thank you for watching.